really interesting, and I think I'm the first person to have found this one. Here's the ETH Bitcoin cross. Now, this will make sense to you. You're a financial markets guy. You know, stuff like junk bonds work out well from the bottom of the cycle upwards because they're riskier. So the smaller, less liquid asset tends to do better. The ETH Bitcoin cross seems to be a function of the ISM, which is the money supply, and the business cycle, which is really interesting. So it suggests we should be going into the Ethereum zone versus the Bitcoin zone.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of Real Vision, Raoul, sounding the alarm on what could be the end of the boom for the US crypto market. After the stance recently taken by SEC Chairman Gary Gensler and the lawsuit against Binance, he believes this is why we're seeing a major issue with regulatory clarity. We're currently seeing the ripple effects from the FTX collapse last November, and the coming weeks will be an indicator for how cryptocurrency will move forward in 2023. Let's get right into the latest interview with Raoul. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Here's the chart that I've not shown anybody yet. This is the Fed balance sheet versus the interest payments leading by 36 months. And this goes back all the way back to the beginning of QE, and it's amazing. You know, obviously we had this little spike from the banking issue. Now it suggests that it should be slowing down in its rate of change and eventually starts going up in Q3. Let's see, right? We've never used this before as a forecasting tool, but the correlation between this and the longer term version of this was pretty staggering. It's like, it's just 36 months delayed payments is coming on the balance sheet. So that's the big hypothesis. My general view is, from the work that we do at GMI, I think the market's priced in, and I've talked about this many times, a recession last year. So the year-on-year rate of change, I'll show the chart later, of the NASDAQ got down to expecting the ISM to get to 37, deep recession. So we're on the backside of that as future liquidity is increasing. But also, you know, a simple thing is, if you go back to 2018, the moment the Fed paused, the market's ripped. I've always said, you know, after you've gone through a whole miserable year like last year, and you've got things like technology that's advancing, the narrative kind of builds and builds and builds, and the Fed take their foot off the beach ball and it's underwater, it explodes higher. And so you've got this kind of crazy disconnect where people can't get their heads around why the markets are rising. And it's both a matter of, oh, finally we can own equities and take some risk again, but also there is an underlying forward-looking element of the liquidity cycle and the business cycle that's priced. We're still in the downside of the business cycle that Darius and I will both go through in a bit, but markets often like to look forward somewhat, and that confuses people. People always look at today as the snapshot. Today's actually never the day. Today's news is not the important news. The important news is what's going on in the forward-looking stuff. Financial Conditions Index, which is based around the rate of change of the dollar, rates, commodities, and that started picking up. This is why we picked up the low. It actually came in June when we picked up the low in Ethereum, and then we confirmed by about October as actual liquidity started changing. So that's when we started getting more aggressive on our technology bets and crypto bets. It has a 5-month lead over global liquidity. So this, and again, this is time horizon. I'm less focused on where we're going in the short term. There could be TGA stuff, whatever. We're not looking for exact matches here. We're like, directionally, what happens? So directionally, this is suggesting, and this indicator has been pretty good for asset price and everything else. I'll come on to that in a sec. The ISM leads it by 15 months. And the reason being, which is weird, is because it's so perfectly cyclical. So each previous cycle looks like the next cycle. So we found that. Now, will this be persistent? I don't know, but I think it will be. So it's suggesting that forward-looking liquidity is going to go significant into 2024. So there's the weekly liquidity outright versus the NASDAQ, which is the one that you'll suggest, okay, this is probably rolling over. Maybe the TGA sucks from this. We don't know yet, but look, it's not going up, but the NASDAQ is. So that's got a lot of people saying, well, it's decoupling from liquidity. However, back in 2018-19, when the Fed stopped, it completely decoupled from liquidity then. This is this beach ball effect. So I'm like, okay, that's not unreasonable. I get it. And the year-on-year rate of change of liquidity and the NASDAQ is consistent. So I'm like, yeah, that's fine. I can see why the NASDAQ could outperform at this point. Crypto in 2019 at its peak was up to 300% and then came back being down 100%. It pulled back for most of the back end of the year. So it's like, okay, fine. We can see that as animal spirits come back in, the year-on-year rate of change in liquidity. So I've been looking at that the NASDAQ is outperforming liquidity. This financial conditions index was the thing that gave us a 9-month lead where we think we are on the business cycle. So whether this is the exact match dates or whatever, but it suggests we've got one more blast lower below, let's say 45, before we start basing. Now, as you know, the economy actually, GDP comes out a quarter later. So, you wouldn't see these numbers and you won't come out of a recession, even though it looks like it's very V-shaped from this. It suggests that, obviously, I think there's a lot of slowness to growth to come out of commercial real estate, the banking issues, a whole bunch of stuff. Meanwhile, all we're saying is forward-looking, our financial conditions suggest, okay, things are on the rise, and this leads the Goldman one by about 6 months or so as well, or 9 months. And that's what gave us this view on the NASDAQ, is the NASDAQ had priced for us 37 in the ISM. So that was like, okay, interesting. And that was where we thought from the financial conditions index, the ISM could go. So I'm like, okay, it seems fully priced. And most of the other asset prices were doing that as well. So that's where we got to roughly with our thinking with this. And that helped us get long at the right time. The other liquidity cycle we've used, just simply because it seems to be a better fit on the year-on-year basis, is global M2 seems to work very well for Bitcoin, and that turned higher. Obviously, we know the Chinese have been increasing M2. I don't know where it is, 12.5% or so right now, and that's dragging this cycle higher. And I think probably global M2 goes higher. So again, not looking for the wiggles here, looking for direction. We've probably got a M2 cycle at play globally. So whichever major countries that's a part of, and that should drive crypto. The other one I found really interesting, and I think I'm the first person to have found this one. Here's the ETH Bitcoin cross. Now, this will make sense to you. You're a financial markets guy. Stuff like junk bonds work out well from the bottom of the cycle upwards because they're riskier. So the smaller, less liquid asset tends to do better. The ETH Bitcoin cross seems to be a function of the ISM, which is the money supply, and the business cycle, which is really interesting. So it suggests we should be going into the Ethereum zone versus the Bitcoin zone.
Lawmakers in the EU have approved the world's first comprehensive package of rules aimed at regulating the cryptocurrency industry. The rules will impose a number of requirements on crypto platforms, token issuers and traders around transparency, disclosure, authorization, and supervision of transactions. Platforms will be required to inform consumers about the risks associated with their operations, while sales of new tokens will also come under regulation. Many analysts predict that we could be seeing similar regulation in the US as early as this year. What do you think about Raoul Pal's prediction for the crypto market and where crypto regulation is headed in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.